Welcome back, everybody. And per your request, today's video is going to be a follow-up to the market top in gold that we called just a few weeks ago. If you missed that one, go check it out. Today, I'm going to be focused on where gold could finally find a bottom. We aren't there yet, so stay tuned for possible areas of resistance. We are going to start by taking a look at the daily chart of gold. As we mentioned before, here was the 13, which was one indicator to why we thought the top was in gold. Unfortunately, this platform does not update futures contracts in real time. So we don't have Friday's bar here yet, but I can tell you, I know the future and that we have actually a 9 selling exhaustion buy setup in place right now, which would highlight that we're entering into an area of consolidation. And so over the next 4 days, we should expect a bounce up in gold. Don't be tricked by this. This isn't a start of a new rally. This is just simply an expected bounce before we continue lower. Now, where do I think the price of gold could be headed? One of my favorite ways to mark retracement when we're at an all-time high in a stock or a commodity like we are right now in gold is using a DeMark indicator called absolute retracement. I have it on the chart right now, but you're probably asking, where is it? Because I do not see it. It's actually all the way down here at 33,117. I've actually got to zoom out for you guys to see completely where these retracement levels could come into play. I already know what's going through your head. Kevin, that's crazy. That's so much lower. And that's how I always feel when I put absolute retracement on a chart. But let's just take a quick look at examples of this happening in the past. Here is the chart of Marvell when it had its high back here in January. And you can see here that we hit all those retracement levels. And then it finally held support after this huge retracement level here. And on a commodity basis, same thing. This high in corn occurred over 2 years ago, folks. And look at these retracement levels as they came. And then once the 50% retracement hit, that's where corn finally found a bottom. Now, I know we aren't looking at a multi-year timeline at gold, so let's use a couple other retracement levels as well, but I want you to keep that one in mind. That's where the first major level of resistance could come into play, but I don't see that occurring over the next 60 days, but it is a possibility. Why did I just mention 60 days? Because this rally lasted exactly 60 days, depending on where you want to say it started from here up to this level here. So another way that we can do retracement is also the relative retracement. I'm also calculating this off the current high. That next area of resistance comes into play 3,634, around there in that area. As you can see here, plenty of downside from where we are right now. That is a lot of money in a gold contract. So this coming week, we could see a little bit of a bounce and then come back into this area. The last thing I like to use for retracements is the Fibonacci retracement. And this is the one I'm using off of a 60-day period. Because often your retracements need to happen in price and time. So I think we should be targeting a possible bottom in the gold correction to be, 60 to 90 days out. So we're very early in this right now, but it does not mean you're not going to have opportunities to trade up and down, but do not expect us to make new highs anytime soon in gold. You can see here, we've been holding on a closing basis these retracement levels pretty well this week, and we ended up closing right around this level today with the closing in gold. So this is an area where you would expect to have a bounce, especially with the 9 exhaustion coming into play on Monday. But if you want to trade this range, you can. Basically, you have a range from 4,000 to 4,150. Very large range, very tradable, a lot of money to be made there. But expect resistance at 4,150, and that's where we could then see the next leg lower down into the 50% retracement level. We clear those levels, then these areas start to come into play over the next 45 to 60 days. Keep these in mind if you're trading gold. Don't get sucked in by the pros. As we mentioned in the video before, they were begging the retail to come in and save them up here. One of the traders I discussed in that video that was claiming that you should have 25% of your portfolio in gold came out just this week and said, oh yeah, well, I don't have a 25% position now. Mine's actually less than 10%. Gee, thanks for the update. As I just told you, these guys go on TV to suck you in so they can sell. Keep this in mind this week. Do not think that a bounce that could be coming this week is a start to a rally to new highs. I think it's going to be a tradable bounce, and we can expect gold to continue lower over the next 45 days. Good luck with your trading.